Hello everyone, a very good morning, good afternoon, and good evening to all of my viewers from around the world. This is your host Vaibhav. In today's session of JForex Indicator Explained, I will be explaining to you one well-known indicator. The name is Tom Demark indicator. This is designed by Mr. Tom Demark, and it is given its his name in its honor. This indicator much like RSI or any other oscillator, but instead of taking into account the closing price, it also consider its price range while determining the overbought and oversold scenario. And also it compares its current volatility to the volatility in the prior periods. So it gives more idea about the price momentum, and we can utilize this indicator to look for the trend as well as the overbought and oversold conditions prevalent in the instrument of our choice. So now let us head to the JForex 4 platform, the newly released trading platform from Dukascopy Bank SA. This is a world-class platform and provides very convenient trading interface. Here you will find this indicator listed amongst the overlap studies, or you can simply do a quick search. First, I will show you where it is listed amongst all these indicators, and after that, we will do a quick search finally. So you can use F3 or simply click on this, and it should show the list. So here comes the list, and in it, you will find it amongst overlap studies. All right, so all these indicators we have seen many of these indicators, their uses, functionality. Now today it's the turn of Tom Demark indicator TDI. So here we have TD combo and TD sequential, but TDI is not showing up. No worries, all we have to do is type in its name and it will show up, okay, wherever it is. So here it is, Tom Demark indicator. All right, now to make it more prominent, I will pull up this charting for TDI to be more prominent. All right, so here, as I said in my introductory remarks also, this is a oscillator. It gives us the idea of the trend as well as when there has been too much of momentum in one direction and we feel that there has been a substantial run up, and now the probability of the instrument going sideways is pretty high. In those kind of circumstances, we can use these indicator to take contra trend trades as well. So this is a multi-purpose indicator. It is going to keep you on the right side of the trend as well as help you figuring out the opportunities where you feel that the trend is likely to turn having run its course. So both ways it is going to give you excellent trading opportunities. Now the basic interpretation is fairly simple. We see this line, the plotting of this TDI output line is indicative of the momentum. If it is on the rise, that means the bullishness is prevalent in the underlying instrument, and more so if it is above zero point 0.3. If the output is above zero point 0.3 and on the rise, then that is indicative of bulls being in charge. And if we have this declining trend and it has now crossed below this 0.7 mark from the higher side, then that means bears are taking charge, and this bearishness is just starting, and we have good probability of seeing these momentum sustain. So as it happened here, and also if we consider this here, this time there were not significant move on the lower side. Still, even if you were to short it somewhere after this decline, you would have probably made money, if not much. And then in second attempt, this decline was quite substantial. And after that, we had these instances of the TDI indicator rising from below zero point 0.3 to above zero point 0.3. But here also there was not much of a movement on the higher side, and it consolidated and eventually declined again. And as a result of that, we saw this TDI indicator dipping below zero point 0.3. So if the momentum is quite strong, and if we see the continuation of the initial move, then as with any other oscillator, this is also likely to result in false signals as it happened here. But if we pair up this output of the indicator with the price action, then I think we have quite a good chance of being on the right side of price moves. So we have to be considerate of this fallibility of the indicator, and then take some measures which will help us in avoiding too many loss making trades if the indicator is going wrong, while profiting substantially if indicator generated signals proves to be good enough, proves to be correct. So that is the way we work with all these trading indicators. No indicator is perfect, but all we have to do is customize that indicator in such a manner that it will bring us quite good amount of money if it happens to be correct. And if it happens to be wrong, then of course we are going to lose some money, but it should be some money, not all of the money. So that is very important in trading if you want to make it big. Okay, so we have to consider both these pros and cons of the indicator. As I said, the drawback of the indicator is that if the trend is quite strong, then we will have it staying in this oversold territory and continuing to generate false signals. And this kind of formation can also happen when the trend is quite bullish and strongly bullish. So if we are going against the trend, having seen the output value of the TDI rise above zero point 0.7, that is indicative of the overbought territory. And if it continues to rise again and again, then of course we have to decide where to pull the plug and get out of the trade and let it go, not take too many wrong trades in this same instance. So apart from these, I think if we simply rely on this output line of zero point 0.7 and zero point 0.3, and instead of getting involved in the initial phase, if we wait it out and try to short it after this decline has happened, or if the rise has happened, while confirming the same signal on the price move, also on the pricing formation also, then we will have higher probability of being right, being on the right side of the trade. So that's how this indicator works, and that's the way we should treat these signal generated by the TDI indicator. Now coming to the editing options, we have seen the classical interpretation of this indicator. We can take zero point 0.5 as a critical marker and consider the output value above zero point 0.5 to be indicative of the bullish sentiments prevalent in the market, and the output value below zero point 0.5 can be considered as the indicative of the bearish momentum prevalent in the underlying instrument. And that case, in that respect, it is pretty much like the RSI. But as I said, the RSI considers closing price, whereas this takes into account the whole range of the price move, high and low. So that is a major difference in RSI and the TDI indicator. Now coming to its editing options, let's see how we can customize this indicator to our advantage. Suppose if you are not really happy with this default setup, all you have to do is vary its calculation period. If you want to calculate it on the extended candle period, then you can do that. Let's try out for 24 hours, as the chart is hourly of the Euro USD. Now I'm using 24 as the calculation period. So last 24 hours of data is being taken into consideration while calculating these TDI output values. All right. So here we have this TDI output. Now it is smoother compared to what we were seeing earlier. And okay, as most of the price moves have been in bearish territory, so many more instances of this TDI output being below zero point 0.3 and far few instances of it being above 0.7. So as the trend has been bearish for the Euro USD for last couple of days, it is quite expected. But if we go back in time, then when the Euro USD was on the rise, we had this output value of the TDI also rising above zero point 0.7. So both these things have happened. Now, if we use the larger time frame for calculating these TDI output values, you can have this lag, but I think that's not exactly a drawback here. Even if there is lag, you will get the confirmation for the trade after substantial price move. So even if you are late in this jump of the Euro USD, as it has happened this time around, still I think in the aftermath of changing the trend, you can continue to ride these changed direction of the underlying instrument. And if the momentum has been bearish, then you can continue to go short or simply sit on the sidelines depending on your risk appetite. So you can vary this calculation period, and accordingly you will have the TDI output plotted. Now coming to editing option again, let's try it out with 48 candle period data. Okay, so there is 48 hours of data being considered while calculating these TDI output, and we are seeing some changes here. So this is going to be lot risk responsive, but the trend generated is going to last substantial amount of time. So it can be considered more reliable, but of course, then you will be getting involved in the trend after a substantial price move has happened. So that is one major change compared to the lower time frame TDI output. So you have to decide which criterion suits you better. If you want more responsiveness in the TDI, then you have to use lower time frame for calculation of the TDI. And if you want the indicator signals which are generated to be reliable but less responsive, in that case you can opt for a higher calculation period for the indicator. So this is the only indicator editing option provided on the platform. Now coming to the output, you can make output quite stylish. So here this line can be given any color of your choice. Suppose if you are not really happy with this pale blue combination, then you can color it up and go for a bright yellow. And if plain line doesn't catch your fancy, then you got this bit stylish colorful option for editing. Now if you want to reduce the visibility of these lines, the lower line and higher line, so here that's how this editing has been done. So we are seeing the values are going to be same. Of course, the styling is the only difference. So you can style it up anyway, which gives you a beautiful chart. All right, so that's all about editing it in a colorful manner. Now coming to the levels, there are no levels to be chosen for this indicator. Coming to this option, recalculate on new candle only. If you opt for this, then whenever new candle is plotted in initial seconds, initial time, the recalculation will be done, and it will remain constant for whole of the candle period, and no change will happen. But if you opt out of this, then the output value will keep varying depending on the price action for the underlying instrument. The calculation period can be highlighted also. So here this calculation period 48 is being highlighted. It is lightly visible, but visibility is calculated from the custom data. Suppose if you want to vary the instrument and you don't really want this indicator to be plotted on other instrument, then you can simply specify the instrument from this option. If you keep it Euro USD, then it will be plotted for only Euro USD. And if you use from the chart, then all the indicator, all the instruments, whenever you change the instrument, it will have the TDI output plotted as well. Candle period, you can use it from the chart. So whatever is the candle period of the chart, it will be calculated accordingly. But if you want to keep it fixed for say any chosen time frame, then you have to specify the calculation period, and it will be of that calculation period. The candle period will be, say for example, fixed at 15, even if the chart is of hourly time frame. The calculation will be as per the 15-minute candle period. So that's how these functionality work. Then coming to the spread side, you can use it from the chart, whichever way it is plotted, ask side or bid side, or regardless of chart, you can keep it fixed to say ask or bid. Then if you opt for this show indicator on all periods, whenever I change the chart from say 10 second to all the way to 1 month, on all those candle periods, we will have the plotting of the TDI. But if we opt out of this and we specify the time frames on which this indicator needs to be plotted, then only on those indicators, only on those candle periods, the indicator will be visible. Now it is hourly, so only on the hourly time frame it is going to be visible. If I change it to say 30 minutes, for example, then no TDI will be plotted, as you can see. Okay, so here the chart has been changed to 30 minutes candle period and there is no TDI output. But if I revert it back to hourly, we will have the TDI back. So that's how this indicator works. So you can customize this to make the information reading quite easy to understand, and you can vary it as per the requirement. And as I have said, all the indicators has have their pros and cons, and I have tried to make you familiar with properties of this Tom Demark indicator and also some of its drawbacks. So I would suggest that you try it out, try to customize this indicator on your own and see what kind of formation is likely to generate higher probability trades, and whatever way suits you best, you should go for it. So let me know if the session was useful or not, and do try out this indicator, and hopefully you will be able to figure out the combination in such a manner that you will get higher probability trading signals. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write back to me in the feedback section, and I will be more than happy to take the discussion forward. Before I sign off, I would also like to remind that you can access many more market development related data on the Dukascopy Analytics page. We are also available on the Facebook. You can reach out to us there too. The link for the newly released JForex 4 platform has also been included in the bio, so do check it out. I will be back tomorrow with a new indicator, new explanation, new formation. Till then, stay tuned. A new session is coming up right after my session ends, so do watch it. I will be back tomorrow with a new indicator. Till then, have a fabulous time, make a lot of money. See you tomorrow, guys. Goodbye.